It's only one of the biggest moves ever in Treasury bond vol. I mean, look at this thing. I mean, and again, it's not new this morning, but it was a big move yesterday on a one-day basis to have the move index up, 582 basis points? And you can see in the box, actually, you can see how many basis points it was up on the day, the week, and the month. And that's how I look at it. That's how we look at the rates of change. You can look at the rate of change of the weather today. On the East Coast, it's going to be quite warm. The rates of change have been going up, and it's late October. Shouldn't happen, could happen, whatever. It is happening. So I'm wearing shorts today, right? So that's nice. That's really nice. But this is not nice. I mean, this is basically telling you almost 2,800 basis points of the move moving is that the Fed can't see inflation. It can't see. They don't really know. They're the most inaccurate forecasting entity of consequence maybe ever. And that's what the market's saying. You can't see this, and eventually you're going to have to see this, but you don't want to see this. And over here we got an election, so they can't see this, and on and on and on. Right? You can see Mary Daly's quote, and I quote this morning, and she's head of the San Francisco Fed, which makes her a voter, which makes her important, at least in the village realm. She says, "I don't see a reason to stop cutting interest rates." One reason. You don't see one? I mean, this is how bad it is, right? She's a lifer at the Fed. She started working there in 1996 when she didn't know anything about anything. But what she did know is that she cuddled up to Janet Yellen. That's her mentor. And again, that's part of the political edifice. So again, Janet Yellen cannot see inflation ahead of the election. Just look at anything she said. But she does say that if Trump wins, he's going to create inflation. So this whole thing enrages certain people. It upsets other people. For other people, it's exciting because it's so screwed up. But at the end of the day, what it's doing in the market is what we're going to keep doing. And the signals indeed got us out of those exposures and, again, onto the short side.
Okay, so before you get into it, I did look up CME Fed Watch, and I checked it this morning, but it's shifting even more. But well, first of all, in aggregate, between now and January versus a month ago, we've probably taken almost 3 cuts off the table, which is kind of crazy. 2 to 3, depending on the probabilities. But November, and this again is versus a month ago, November is now a 1 cut. A month ago, it was highest probability was 2 cuts. Mm-hmm. December, we now have 68% of it an additional cut, but a month ago, you had 24% of 3 cuts. Mm-hmm. 3 additional cuts, and then January, kind of similar story, right? So I think by and large, between now and January, you've pulled almost 3 cuts off the table.
Yeah, so it's amazing to watch the pendulum. Yeah. We have the chart that shows the pendulum of rate expectations, and our process has pretty much nailed all of the moves. Very short-term moves or quarterly moves, and that's the process in motion. So we'll keep thinking about that. Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.